Hey everyone, in this video I'm going to bring you my top 10 dividend stocks you can buy if you're looking to generate passive income. Now, as I usually do with my dividend stock videos, I highlight the fact of looking for total portfolio return and not just dividend income return. And I'll talk a little bit more about that in the video as I share with you the top 10 dividend stocks to buy. I'll also go through how these stocks have performed for the year. I've been highlighting a top 10 dividend stock portfolio throughout 2024, and I've been updating how those 10 stocks have performed all year long. So I'll do that again in this video, where I'll compare my dividend stock return versus the S&P ETF dividend stock return. So you'll see how my portfolio of 10 dividend stocks is performing against the S&P dividend portfolio. So without further ado, let's take a look at these top 10 dividend stocks to buy now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, the first batch of 5 dividend stocks, I'm going to do these 5 at a time, are Visa, Altria Group, Nike, Starbucks, and eBay. And as you can see, the dividend yields vary significantly among these 5 dividend stocks. Visa offers a dividend yield of just 0.7%, while Altria Group offers a dividend yield of 8.9%. But while Altria Group offers this higher dividend yield, I expect Visa to have better dividend payment growth over the next 5, 10, and 20-year periods. And so you might get a better dividend yield now with Altria Group, but if we look 5 years ahead, 10 years ahead, and 20 years ahead, I feel that Visa will give better dividend growth. So you'll get more increases in Visa. That's where I talk about total portfolio return, where you're looking at a longer time period and you're looking at the total return of the portfolio and not just the dividend yield. And I think Visa is an excellent one there. The next one, Nike, 1.51% dividend yield. Again, I think Nike over the next 5, 10, 20-year period has an excellent chance to increase that dividend yield. Also with Starbucks, 2.41% dividend yield, but Starbucks is still very much in growth mode. The company is adding new locations still, and it's increasing its earnings per share and increasing the dividend payment. eBay is an interesting one, offering a dividend yield of 1.93%. eBay only started paying a dividend just a few short years ago, but I think eBay has an excellent chance to increase its dividend yield, increase its dividend payment, because the company runs on an asset-light business model. The profits that eBay generates, it can return to shareholders on a larger percentage basis because it doesn't need to reinvest in the business at a large percentage. It's running an asset-light business model. That's one of the benefits there with eBay. Now, with these 5 stocks, they've returned pretty strong returns so far in 2024, with the best one being eBay, which has given investors a total return of 21.65%. Next with Altria Group, which has given investors a 10.54%. And for passive income investors, Visa has returned 7.39%, followed by the 2 negatives here with Starbucks at negative 4.28% and Nike with negative 13.13%, as Nike's business in China is struggling for growth. Nike, although restructured the business with some cost cutting early in 2024, I think those cost cutting efforts are going to pay off in the second half of 2024. The next batch of 5 dividend stocks that I think are excellent buys right now are Target, Coca-Cola, Home Depot, the Walt Disney Company, and Caterpillar. And again, the Walt Disney Company only with a dividend yield of 0.25%, but I think the Walt Disney Company has great prospects to increase that dividend payment over the next several years and the next several decades. Remember, the Walt Disney Company paused its dividend at the onset of the pandemic because it was unsure of its financial prospects. It recently reinstated the dividend, and management telling investors that their cash flow, their profitability is expected to soar over the next couple of years as the business recovers from two severe forces that impacted it negatively. The first one is the obvious one, the pandemic. The second one is not so obvious, and that is the transition to streaming. That hasn't been good for Disney so far. It's been messy, it's been choppy, but management said by the end of 2024, its streaming business will be profitable. After several years of negative profitability after several years of negative cash flow in that business. It finally feels that it has invested enough into the business and there's enough scale in the business where by the end of 2024, that segment is going to deliver profitability to the business overall. And supplemented by the theme park segment, which is absolutely thriving. Disney's theme park segment is more profitable than before the outbreak. And so now, coupled with the streaming segment's profitability, Disney's profit prospects look excellent over the next several years. And the others in this list also have excellent prospects, including Coca-Cola with a dividend yield of 3.05%. Coca-Cola benefiting from the away-from-home trend. Coca-Cola has a larger market share in away-from-home segments like restaurants and theme parks and movie theaters. And so Coca-Cola benefits when consumers are spending more money away from home, which is precisely what's happening right now. And Target, I've repeatedly said how effective Target's management team has been in updating its brick-and-mortar locations and making them more attractive to customers, bringing them to an advantage instead of what they used to be around 2015, which was a significant disadvantage. Remember when everybody was saying these brick and mortar businesses were dead, Amazon was going to kill them? Well, Target has done an excellent job in turning that huge disadvantage into now an advantage. It can fulfill your orders faster than Amazon. Same-day services are now more quicker than Amazon in getting your orders to you, and that's been very, very favorable for customers as they've shown a strong preference for that service. And in this batch of 5 dividend stocks, they've all done positive and they've all returned a great dividend and total return for passive income investors. Leading the way is Disney with so far year to date, it's up 35.52%. Target 25.35%. Caterpillar 24.51%. The Home Depot at 11.35%, and Coca-Cola at 4.65%. So out of all of my 10 dividend stocks that I've highlighted as top 10 dividend stocks, 8 of them have been positive. Only 2 have been negative for the year. So 8 out of 10 for positive versus negative in terms of the total dividend return. Now, I'm going to measure these up against the S&P dividend ETF, which so far year to date has delivered 5.6% for passive income investors. The end of February to the end of March was a strong time for dividend stocks. To start the year, dividend stocks were not doing very well. You could look from January down to about mid-February. Dividend stocks, the S&P dividend ETF was down 2.5%. But now it's up 5.6%. You can see that surge higher for dividend stocks as investors went searching for passive income. Now you can see here with my 10 stocks, my average return so far year to date with these 10 dividend stocks is 12.36% as of the end of March, which if you compare with the S&P dividend ETF at 5.6%, I've significantly outperformed the S&P dividend ETF. In fact, I outperformed the S&P dividend ETF by 120.6%, a strong outperformance to be sure. And to be honest, my dividend stock portfolio has outperformed the S&P dividend ETF all year long. I can go back to the returns in February. My total performance was 5.57% versus 0.15% for the S&P 500 dividend ETF. And then at the end of January, I was 0.10%, while the S&P dividend ETF was negative 0.87%. So throughout the year, my dividend portfolio has outperformed the S&P dividend ETF significantly. However, I have also highlighted every month of this outperformance not to expect this kind of outperformance from me for the longer term. I'm not going to outperform the S&P dividend ETF by this magnitude for an extended period of time. That's just unrealistic to expect that kind of performance from an individual like me who's making videos on YouTube. This is the kind of outperformance you might expect from, I don't know if this has even been done over the long term, over 5-year, 7-year, and 10-year period. So this is an unrealistic outperformance. This is just a fortunate turn of events here in the first quarter of 2024. It's a welcome fortunate turn of events, but it's not to be expected longer term. And I would be saying that in the same way if I was trailing the S&P 500 ETF by this magnitude. Imagine if I was negative and the S&P ETF was positive and there was a big gap there, I would be saying the same thing, right? So I'm going to say the same thing if I'm positive right now, more positive than the S&P dividend ETF, as I would be saying the same thing if I was more negative, significantly more negative against the S&P 500 dividend ETF. Over longer time periods, there's going to be a mean reversion where my performance will be significantly closer to the S&P dividend ETF performance. So with that being said, those are my top 10 dividend stocks to buy right now for passive income investors. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button and I'll see you again soon.